I'm Lori Chortis for Ambest TV. This year's Vermont Captive Insurance Association annual conference takes place August 7th through the 10th in Burlington, Vermont. Joining us now to talk about the conference is Dan Teclaw. He's a director at Ambest. Dan, welcome. It's great to see you.
Hi, Lori. Good to see you too.
Dan, what issues do you expect to be front and center at this year's conference?
Well, I think a lot of things that we cover in captives are just generally the hard market and how captives are continuing to be good risk management alternatives for all the different captive owners and members. So different ways that they'll be used, pricing, why they need to be used. We see a lot of companies increasing their usage, adding lines and stuff like that, as well as retentions for maybe some longer reinsurance relationships that have kind of either pulled out or demand a little bit higher pricing, and the captives don't feel like they need to pay it at this point. So it's like temporary stopgap kind of fills. And I think those are the main things, as long as some other, as well as some other types of things like cyber always seems to kind of come up, and how you use that or how you can cover that in a captive, or even parametric coverages or ways to cover different losses by a parametric. So I think those kind of things are going to be interesting to hear about from a lot of different viewpoints.
Ambest has a new captive report. Can you tell us a bit about that and some of the key takeaways from the report?
Yeah, sure. We've been writing this report for 20-some years, and we seem to get the same result with captives showing better profitability than their commercial casualty peers in the insurance industry. A lot of that is due to the professionals that run captives and their ability to tailor risks and size them for what they need. Last year, most of them had good underwriting years, and they generally have good loss ratios. It was a little bit of a challenge with the investment markets, with the Fed raising rates starting in the first quarter, and that damped profitability in general. But overall, it still easily outperformed the peers. The average combined ratio is about 15 points better than the commercial casualty peers. So those kind of things continue to emerge, and we expect more of the same in 2023.
Are there any emerging trends of note?
Well, I think we're seeing a lot of continuation of trends in the hard market for formations and increased usage by captive owners and members. On the sell side, there are some domiciles that call them cells, some call them series, and we are seeing more uses for companies that want to segregate their losses, or do a try before you buy kind of rent a captive setup, and then they maybe redomesticate it out eventually, or set one up on a platform and stay on the platform. But those are a couple of different emerging trends. Kind of overshadowing that is the IRS scrutiny, and I'm sure that'll be talked about at the conference as well.
Dan, I look forward to seeing you in Burlington. Thank you so much for joining us.
Sure. Thanks, Lori.
That was Ambest Director Dan Teclaw. For Ambest TV, I'm Lori Chortis.